Good morning to all traders and welcome to another Marketing Waves. August 27th, Friday today is the last Friday of the month. We have Jackson Symposium. Fed Chair is going to talk. Obviously, it's a 3-day open event, but today I think he's going to talk and we are likely to see more volatility. Although they want to avoid volatile speeches and announcements, I think the market reaction is going to be a bit different. Plus, don't forget it's the last Friday of the month. We expect things to be a bit more complicated than any other usual Friday. We're gonna have a quick look on DXY, Euro Dollar, oil, gold, and natural gas again. We received an invalidation. So before we get there though, let's jump onto this sort of order here from top to bottom. DXY looks like to me, we identified a double bottom here yesterday, right? So it looks like to me that we have actually finished a flat pattern here, guys, because we've got an ABC right here, yeah. We've got an ABC, 1, 2, 3, 4, and 5. That's what I see. This is a regular flat, okay? Which means to me that most probably this is our wave 1 and this is our wave 2, and we will start heading lower now for our 3, our 4, and our 5. That is going to be, of course, in wave 1. Okay, then we'll get 2, 3, 4, and 5. Yes and no, we might be looking here at a very big leg to the downside, but if we take into account we're in a primary degree and we're looking for a low below the 89, that's the only structure that can really work out for the moment at least. So I'm not sure I should be really looking at previous lower lows here and extensions and stuff, but because we're very, we still haven't broken out the previous low over here. But once we do break that previous low, we're looking at 91 next, okay? I'll be, of course, paying attention to 92.50 and 92.20, okay? Now, if, and I say if, we are not going to break that level here, okay, and bounce higher up, most likely this is going to be a W, X, and Y, okay, which means we might stay here for a bit longer. And if that's the case, then it's likely to get the X down here, and the Y, we might come a bit higher up to 93 or so, okay, do a bit more of a sort of correction, because don't forget also that waves 2 usually correct 61.8 of the preceding wave 1, usually, right? It's not, it's just like a guideline, it's not anything like a rule. If we look at the RSI and MACD as well, and how sort of this bullish hidden divergence is popping in both cases, then we might actually see that leg coming in quite soon. So might get a simple zigzag here in wave X and then continue higher up with another ABC. Or, well, that's a flat, so it doesn't have to be an ABC. It can be another flat. It can be a triangle. It can be an ended diagonal, okay? So keep an eye out for these sort of short-term price action, so that we get a bit more of a guide towards short-term price action in terms of projecting some sort of targets. Euro dollar, we did a short correction here, and I'm not sure whether I should take it as the end of it or no, but to me that looks like an ABC, okay? So that also looks like an ABC. That also looks like an ABC, right? So there's two different ways to look at this. This is 1 and 2, either finished or it's going to finish lower down, will continue higher up. This is 1, since that correction fits more this 5-wave leg to the upside. This is A, this is B, and we're gonna get C as an ending diagonal because we have a 3-wave move here, right? So C in end diagonal flat, very possible scenario. Or we might just be, that's my 1, that's my 2, And that's 1 and 2. We're going to see 3, 4, and 5. As you can understand now, the flat pattern is over here. ABC, ABC, 1, 2, 3, 4, 5. This is a flat, an ending diagonal. That fits better this 5-wave leg as well to the upside, okay? 1, 2, 3, 4, and 5. We've got ABC for wave 2, and then 1 and 2 for 1 and 2 again. That is a multi-structure move to the upside. And obviously, the one pattern is going to support the other in terms of euro dollar and the index, right? I'm not saying obviously that you know, if we continue higher up here, most likely we're going to get the breakdown on the DXY as well, right? If we move lower down, most likely we're going to get a deeper correction on the DXY as well. That's what I'm saying. Now on oil, we did a very nice bounce on 67. That is good. We do still see these two signals on the RSI and MACD. And the truth is that for the first wave up, this correction 23.6 is not really enough. So we might see another leg moving a bit lower down to 65, 64, who knows. But obviously for this to take place, we need to break below the 67, which for now seems to be holding quite well. We've had 4 attempts over here, 1, 2, 3, 4, and prices, bears didn't have the power to push lower enough, okay? Low enough, they didn't. So over here, we look at this as 1, 2, 3, 4, and perhaps 5, ABC and up, or it could be 1, 2, because it looks like huge, like it could be now here, 1, 2, 3, 4, and 5 again. So we're just looking at differences in this 5-wave structure, but this looks like the most probable one because that's an ABC and that is an ABC as well. So 1, 2, 3, 4, and 5 as well over here. That might be our flat finishing or haven't actually is done already, right? And that means now we get 1, 2, 3, 4, and 5 to continue higher up, okay? Unless if ABC, that's W, X, and we're gonna get Y. This is also a very possible scenario, guys, okay? So I'll be looking at the top breakout, 68.50, or the bottom breakout, 67. This range, well, might remain being a range for a while, but we need to pay attention. This is the one we need to pay attention. Should we move higher up? Don't forget that also we might just be on an ABC here, right? Because yeah, that's what I said. Should we move up and we get a rejection here, then most likely we're gonna move down for a wave Z, and that will be a triple zigzag. Okay, but for the moment being sideways with a bias to the downside can be expected due to the signals on the RSI MACD. Gold, boom, double top. No, that was not really needing a boom and then a top. A boom, gold, double bottom. That sounds better, right? So a lot of attempts to break the 1780 over here, obviously. Didn't happen. We've got this leg up the other day and we said we expect a correction. We see the signals popping on the RSI MACD as well. Now, this looks like an A, guys, okay? And that looks like we're going for B. And then most likely we're gonna get another leg down, okay? But again, we need the 1718 to break 80. If it doesn't break, then likely to continue higher up. As I said with the previous example, wave 2 usually tends to correct 61.8. Now in metals as well, commodities, they do actually more most of the time, okay? Now 1745, that is one sort of target, but then don't forget that here our MACD is actually looking positive and our RSI just reached overbought levels. So it might just be indeed this wave B, yeah, let's see. We did the 61, even more than 61.8 actually. So let's see what happens. 1803, previous high, need to pay attention. If we get stuck here, then most likely we're going to get another leg down. Okay, and that leg down, well, can take us, let's see. We'll do 618, that's the 1762, and perhaps even, who knows, I don't think so, but 1750. Okay. Quickly on natural gas, I left the account as yesterday. I didn't change it, so we see here the mistake. My mistake was that I didn't see this coming, of course, but I didn't speak about the potential of that moving higher up. It was a sudden move. This looks like a clear 5-wave move down, and this is expected to be, it looks like an ABC even now. Okay, so one might say, okay, what about a regular flat? But flats, guys, do not have 5 waves. They're 3, 3, 5. Yeah. So the only thing we can do here, yeah, is to consider this as a W, X, and Y over here. It would be like ABC, W, X, ABC, Y. Okay. And then this is a wave 1. Yeah, but let's measure our wave 3. 1 second. I want to see our 3 compared to our 5. Okay, 3 is a tiny bit bigger than 5, so we're good. This is a leading diagonal, guys. Okay, and it's the corrective type, because you might don't know, but leading diagonals can also come in 3s. Whoever tells you it's 5, 3, 5, 3, 5, and that's it, it's wrong. They also come 3, 3, 3, 3. And the diagonals never come in 5, 3, 5, 3, 5. Okay, they're only 3, 3, 3, 3, 3 structure. Anyway, my 1, my 2, a very clear 3, extended, strong, with momentum, high in volumes. That's exactly the 3 we need. We are off for a correction for sure, and then continue higher up. But this higher up is going to be our wave 3. Actually, hold on, that's my 4, guys, now. Okay, we're going to go for minor 3. Okay, at least for 37 over here I've got, but if we pull that magic Fibo, for now I'm going to look at 38.2 first. So we're looking at 447, 460, 480. Okay, at some point in one of those levels we're going to see a correction. Okay, and that correction might actually be quite a big one, because we are expecting the minor wave 4, right? So pay attention to the natural gas. It might also just keep moving higher up, and we might just get a very, very short lasting and in terms of depth correction in wave 4. Okay, but judging from our 2 over here, it's likely to last like maybe a month or so. Might be just sideways as well. So that's going to be all for this week, guys. I want to thank you for watching, and do not forget you can ask any questions you want on our YouTube channel. Trade carefully today. Volatility is expected despite the fact that the Fed doesn't want it, and keep your stops tight. Okay, enjoy your weekend, and we'll be here again next Monday with another Markets in Waves.